We want to create value for you. We want to ensure that you're getting value. So our customers are our priority. We want to make sure that every transaction that you have with Vale Financial Services is as seamless as possible. We treat every of your concerns. They are our priority. And we took ownership. We take ownership of whatever we're doing here at Vale. We're very proud of what we do. We take responsibility. We believe that leadership is responsibility. So we take responsibility for every single thing that we do. Then we also speak about integrity. Our yes is our yes. We say no to fraud. We say no to forgery. We say no to anything that can taint our name or taint our reputation. So we're very integrity conscious. Then we have two eyes. The second eye speaks about innovation. We are a digital bank. Let me say that again because I'm always excited to talk about that. We are a digital, so we're always innovating services, innovating products that can meet the needs of our customers. So you see that again, meeting the needs of our customers, then co-creation and empathy. All right. So we're going to get into the topic for today. I'm sure that our speaker is here already. So I'm going to be introducing our speaker for today. Let me just confirm she's in the room already. All right. So our speaker for today is Oluwashola Akonde. She's going to be taking up the webinar for today. Oluwashola Akonde. I can't begin to speak, too much of our speaker for today. She's a financial guru. She has a wealth of experience from the consulting firms, the big fours. She has also worked in the banks of Nigeria. So she's well rounded to speak about our topic for today. Again, managing wealth, hedging against inflation and FC fluctuations. So ladies and gentlemen, please give it up to our facilitator for today, Oluwashola Agunde. Over to you, Oluwashola. Please let's welcome her in the chat box.
Thank you very much, everyone. Wow, we're happy to have you here. Thanks for joining from wherever you're joining from. This is Amshola Akonde, like I've been rightly introduced. So today we're talking about hedging inflation, hedging inflation and FX fluctuation. We know what is happening in our community today. How do we manage wealth? How do we ensure that in the light of everything that is happening, we are able to protect our wealth? Managing wealth is a very critical part of financial stability, and it's a strategic approach that involves saving, investing, protecting your assets, really, to ensure long-term financial health. As a person, you would have personal goals that you want to achieve, whether it is long-term or short-term. It could be long-term that ensures that you have a comfortable lifestyle in the future, or short-term, like ensuring that you have enough money to fund things like education, to fund vacation, to just make sure that you're okay, you're able to do everything that you need to do. And why is it important to manage your health? It is important because it gives you protection against economic uncertainties, such as inflation and FX fluctuations that we're talking about today, and market volatility. Okay, another reason why you need to manage your wealth is compound interest. It means that you can manage your wealth such that your money is working for you. Your money is earning money. You have investment that has yielded money, and that money yielded is making more money for you. It's also important because if you don't manage your wealth very well, you would not have enough funds to fund your passion, to fund your interest. Some people's passion is, I want to see the world. I want to go to this place. I want to do this course. You need money to fund those things. Another reason why you need to manage your wealth is that it is a safety net for you. you would be able to get access to emergency funds if there is anything that is happening. It saves you when you have funds to take care of things that come up, contingencies, so that you don't have issues on the unplanned outcome in life. So this is really very, very important. So first, we speak about inflation, because the topic today is managing wealth against inflation, in the wake of inflation, FX fluctuation. How do you ensure that you manage your wealth very well? How do you ensure that all the things that are happening does not just come and erode everything you worked for? In terms of inflation, I just want to take some time to explain inflation. Inflation is sustained rise in the overall level of price in the economy, meaning that what my money can buy today cannot buy tomorrow. If I have 10,000 naira today and I'm able to buy X, Y, Z, if the inflation rate is 30%, as we have it above 30%, currently now, as at April, inflation rate is 3%. So that means that, let me use the example of today, where we have inflation at 33%. What I can buy for 100 naira today, I will need 133 naira to buy it in 1 year's time. So that means that the same amount of money can buy less new goods or services in the future. It also means that the value of money or the purchasing power of money decreases in an inflationary environment. So meaning that your money just keep reducing in value every day. Okay, what causes inflation? You may want to ask. The fundamental cause of inflation is excessive demand, either for raw materials or finished goods or labor, that outstrip the economy's ability to respond. So in an economy like Nigeria, if what we are demanding for as a country is more than what we are able to respond to in terms of production, then we have a case of inflation. In developed economies and countries of the world, there is a general consensus that inflation growth between 2% to 4% is necessary for the health of the economy. But in a margin economy like ours, where inflation is above double digits, really even above 30%, it's a wake-up call to say, if you need to have more money to maintain your wealth, you have to do something active about it. Okay, there are different types of inflation. There is a cost push inflation, and there is a demand pull inflation, and there is a built-in inflation. So the cost push inflation is increase when there is increase in the cost of production. So there are manufacturing industry that uses the basic cost of production. There is labor, there is wages, there is raw material. When those things go up, they most of the time pass this cost to people that want to use those final outputs, and then there is inflation. There is demand pull inflation that I mentioned earlier, when demand for goods and services exceeds their supply. Too many people wanting to buy a particular thing, it pushes the price up. For example, if you have something and I say the price is this amount, and 20 people are ready to buy it, and it's short an item, what you will find out is that there is it goes to the highest bidder. So those are kind of things that cause inflation. Built-in inflation is what people are now used to the concept of inflation. They expect that there will always be inflation. So in their budget, in their forecasting and planning, they build in inflation. And because of that, there is now actually inflation, because we all expect that there will be inflation. Okay, so that is speaking to the type of inflation. Example of inflation, we all know about the story of Zimbabwe in 2000, where inflation kept going up and going up and going up to an extent that they had to even leave their own country, currency. I hope that won't. The government is doing all they can to ensure that it does not get to that stage in Nigeria today. And we also know about the current inflation in the country that is as high as 3.69% in April, compared to what we had in December 2022 of 21.34%. So these are examples of situations of inflation. What is the effect of inflation? Someone might just think, okay, if they're speaking about inflation, Inflation this, inflation that. What is the effect of inflation? What is the effect of inflation? So, like I mentioned earlier, inflation reduces the purchasing power. It reduces the purchasing power. It causes a decline in the standard of living. What you're able to afford today, because of inflation, if your earnings are constant, you are no longer able to afford them. But also reduce values of savings. If you keep 1,000 naira in your bank and you leave it there, what you can buy with that 1,000 naira, you find out that you are not able to buy it again in another 1 year, in 6 months, depending on how severe the inflation is. There is also uncertainty and planning difficulties because you're not able to predict costs. So with inflation, you could have predicted that I'm buying this at 10 million naira. This equipment at the beginning of the year, I'm buying it at 10 million naira, but then in 6 months' time, it become 12 million naira. So that does not help businesses plan. Okay, another thing is inflation helps redistribute wealth. So if you are a borrower, it can benefit you because it reduces the real value of that debt. There's something we call time value of money, where the present value of your debt reduces because there is inflation. And then for lenders, it reduces the real value of the repayments because you said that you collect this as a lender, and the person pays you that amount in 6 months' time, but what you're able to do with that repayment is not really as much as what you should have done with the money today. Okay, so foreign exchange fluctuations. Let's go into that. What is foreign exchange fluctuation? I know most of us have heard about it. It simply changes in the value of one currency relative to another currency in the foreign exchange market. Okay, so it reduces real value of savings if you are not strategic about it. So if you have USD, we all know what happened between December last year and Q1 2024, where exchange rate was less than 1,000 naira, benchmarked against dollar, and then today it is way above 1,000 naira, 1,005 in the parallel market, about 1,300 to 1 USD on CBN, really CBN exchange rate. What does this tell us, and what is the impact of this to you as an individual and as a business? What are the things that causes FX fluctuation? Number one, economic indications. There is the interest rate parity, there is purchase power parity laws that says that countries with high interest rates, high inflation rates, and low GDP rates are more likely to have their currency devalued. This means that we can apply this to emerging economies in Africa, where compared to developed economies in Europe, our interest rate is higher, our inflation rate is higher, our GDP growth rate is not as high. So we'll find that our currency is not as valuable as the currencies in those developed countries. Okay, another thing that could cause fluctuation in foreign exchange is political instability and poor economic performances. Countries with stable government, strong economic performance tend to attract more foreign direct investments that will come to their country to invest. So an FDI would not want to put their money in a country where there is chaos, where they cannot even do business without fear of attacks, of vandalism and all that. So countries with all those things would not attract foreign exchange. We do not have enough foreign exchange in your country that you are attracting. Then demand for foreign exchange would outweigh the supply foreign exchange in your country. So that leads to a very large spread between your buy and sell, and can also cause FX fluctuation. Another thing is speculation. The country where the parallel markets and the regulated markets there is a wide disparity. Arbitragers will want to exploit that opportunities, and so people speculate with a large volume of FCY. So this does not help. It leads to short-term fluctuation in foreign currency. Again, if you look at trade balance and capital flow, I mentioned a bit about it. In developing countries, for instance, like Nigeria, we do more of imports than exporting. Meaning that when you do a lot of imports, you are even spending more USD. But when you export, you're attracting more foreign exchange. So when a lot of this importing happens, and we're able to attract a lot of foreign currency into our country, it will lead to devaluation of the currency because of the deficit. Okay, so another thing we'll talk about now is causes of FX fluctuation. Okay, we've spoken about economic implications, and now we'll go on to the impact. What impact does it bring when there is FX fluctuation? So this addresses individuals and businesses as well. So if you are joining us, you should begin to see how this is applicable to your individual financial planning, and then as a company as a whole. Okay, number one is on international trade. Exchange rate fluctuation impact the competitiveness of exporters and the cost of imports. So if your currency is very strong, when you are importing something, it is beneficial to you. Okay, if your currency is very weak, when you are importing, it is not very beneficial. So we take Nigeria as an example. Importing in Nigeria today, it's expensive because of the exchange rate, right? Which is part of why we have inflation too, because we import a lot of things in this country. So on international trade, which again brings to mind that if you want to scale above FX fluctuation, you might want to explore businesses that allows you to export to the outside community, so you can have foreign currency. Okay, what is the impact of FX fluctuation on investment, especially if you invested in assets, in FCY assets? The impact is that the changes in exchange rates can affect the value of those investments. For example, if you reside in the US and you bought a stock in Nigeria, the more naira weaken, the more you lose value on your Nigerian stock asset position. On remittances for individuals, so here a lot of people can relate with this. So if you are someone that receives money from family in the abroad, you know that it's when the money they sent to you, the same dollar that was sent to you last year in naira terms is lower than the same dollar that they've sent to you this year in naira terms, meaning that you were sent $1,000 last year, say for instance, at exchange rate of now 1,000, but this year you were still sent $1,000 this year at exchange rate of 1,500. You can see that you have more in naira terms here. So on remittances, exchange rate, it makes it fluctuate. And now for parents that are in Nigeria that are sponsoring their children outside the country, they find things more difficult, really, because they've had to spend more. They've had to spend 50% more sponsoring their wards because of the fluctuation in exchange rates. Apart from the inflation in the country where their children are studying. So those are the impacts that FX fluctuation can have. Even on businesses, the assets you plan to purchase last year, maybe it was just 50,000 USD last year, and this year is slightly increased to 51,000 USD, which one feels like 1,000 USD increase is not bad. But when you bring in the FX dynamics, you are paying 50% more for that same asset. So these are the impacts it has on businesses. So we can begin to relate to how it applies to us as individual and how it applies to us as a business. The next question is, how do we protect ourselves against inflation? How do we protect ourselves against FX fluctuation? We know that the government is coming up with different monetary and fiscal policies to hedge against inflation and exchange rate. But as an individual, you're asking yourself, while the government are at it, what do I need to do for myself? What do I need to do for my business? First thing you can do is explore other sorts of of investment. You can consider having investment in real estate, real assets like real estate, because reason is because the value of those assets really tend to increase with inflation. Want to go into investment that when there is increase in inflation, the value of those assets also increases. Another thing you want to explore is investment in stock and equities. Why is it beneficial? Because it is beneficial because companies tend to also transfer the increased cost of input of production to their end consumer. So in terms of the high inflationary economy, what you see is that companies transfer those costs. And when you have investment in those companies, you tend to have capital gain or you tend to have dividend, which is good, really. So invest in stocks and equity. Okay, another thing you can explore is alternative investment. Alternative investment does not follow your traditional investment approach. So that is hedge funds, commodities, crypto assets, digital assets, really. But for alternative investments, the word of caution is that it requires a lot of expertise. And it's something that for you to get the benefit, you must actively manage it. So alternative investment is something you can do if you don't have knowledge in that field and if you don't have time for active investment management. Another thing very, very important, this tip is very old, is having a savings culture. As a person, individually, make sure you save. As a company, have savings. It's very, very important. You cannot afford to spend everything you are earning. Make sure that you are saving and saving from time to time. Because remember, we said that part of the reason why you must manage your wealth effectively is so that you can have funds for emergency situation or to harness important opportunities. Sometimes opportunity just come and it comes to the person with the asset in terms of liquid cash to harness such opportunities. So saving is very, very important. Okay, hedging against FX fluctuations. Okay, so we have currency hedging. So example of currency hedging, you can engage in forwards, in swaps, in options. Okay, so that you make sure that it's currency hedging is just a way to make sure that my FCY assets and my FCY liability to a certain extent is well catered for. So let me explain forward, for example. Go to a financial institution that does that and say, okay, I want to buy a forward. So they give you a forward rate and you lock in that rate from day one so that in the future, on that date, you're only obliged to pay in line with the forward rate that you've locked in. So it's good for businesses, really. And there are a couple of financial institutions that are engaged in that in Nigeria. Another thing to hedge against FX fluctuation is diversification. Diversification is very important. So in an economy where what is happening in the economy it impacts different sectors in different ways, you want to diversify. If you're buying, let me say, for example, we're going into stock and you are buying a portfolio of stock assets, you want to pick some from the financial industry, you want to pick some from manufacturing, you want to pick some from telecommunication. You just want to make sure that you have some diversification of assets. Okay, another thing you can consider doing as a business is multi-currency accounts. Have DOM accounts, have Naira accounts, have different accounts. So that when you need to, when USD or when FCY is not very expensive, you can put money you need for future in those accounts, and when you need to make those expenses, you can spend them. Another thing is natural hedges, things that are just intuitive, just common sense, leading and lagging. Saying that, okay, I want to make these payments, and I think currently FCY is USD to Naira is not so high, so I pay now. Or I feel like in 2 months' time, something might happen that will make it cheaper. So I wait till that time. Just for example, I know a lot of people took advantage of it when dollar went as low as between 900 to 1,000 some weeks back. They quickly made some expenses that they needed to make. So those kind of leading means paying than ahead, or when you actually need those expenses because you feel like exchange rate is low now. Lagging means just delaying the expenses you need to make in foreign currency because you feel like it will come down in the future. These are not perfect, just more about looking at the outlook and speculating. Okay, other things that you can do to manage your wealth effectively are effective risk management strategy as a business. There are some things that should not happen to you. Number one, if you are in an industry or a type of business that is asset heavy, you want to transfer your risk. You want to use an insurance industry, you are in knowledge, you are in a sector that you have a lot of assets, really that are tied to your balance sheet position. You want to insure your assets. Sometimes you just want to reduce the risk by making sure you bring in measures to ensure that certain operational risk does not crystallize. So effective risk management strategy in your individual businesses is very important in managing your wealth. Another thing is detailed budgeting to track your income and expenses so that you ensure that your spending aligns with your financial goals. Again, I've mentioned this before. In terms of currency depreciation, explore lines of business that can bring you FCY income so that you can have and it helps the whole country in general. If today Nigeria is so much import dependent, if we move from being import dependent to exporting a lot, we'll find out that how do I put it, the supply of USD or other FCY that is not enough will become more than enough, and then our FCY rates will start coming down. So these are things that we need to apply to our individuals and to our business in general. Okay, what are the considerations when you want to manage your risks? What are your wealth? What are the risks? What are the considerations? Number one, there's something called active investment and passive investment. I often tell people, do not invest in what you don't have time for actively. So you are an employee somewhere, you do 9 to 5. Please don't invest in a business that needs your full-time attention. Don't invest in a business that needs you to be there 12 hours in a day. And then you not abandon, you leave that business, you're not able to cater to it as much as the business requires because of your 9 to 5 work. And then 2 months later, you find out that something happens and then one employee defrauds you or customers are going in droves. So assess the kind of investment you can go into as an individual. And even as a business, if as a business your primary focus is in this particular line and you want to invest in this other particular line, you know that cannot be an active investment for you. What you do is to go for passive investment. By passive investment, I mean investing in stocks, where you get a broker to manage your account for you, investing in other people's businesses by buying equity shares. So those are passive investment. Active investment is when you're actually running day-to-day operational activities of the company. Another thing you need to consider, given everything I've said since morning, is that imperfect hedging exists. Hedging is not perfect. For forwards, for options, for all these derivatives, it's not perfect. Sometimes you have 80% efficiency and 20% inefficiency. It's just better to attempt to hedge than to do nothing. So one must be aware of those inefficiencies. Another thing is importance of regular monitoring and adjustment. From time to time, you see, okay, how does my business strategy, how does it align to what is happening in the regulatory environment today? So there must be constant, regularly, and monitoring and adjustment from time to time. You must always be dynamic. You must be agile. You must be ready to move when things are moving. When rate is going up, you must ask yourself, how does this impact my business? When inflation is high, you must ask yourself, how does it impact my business? And what do I do to position myself correctly? So that monitoring is very important. And then in managing your wealth, you must be aware of transaction costs. It doesn't come for free. When you invest in equities, in stock position, you pay commissions, you pay brokers fee. When you do hedging, you pay commissions, you pay fees. So being aware of that transaction cost help you to do a cost benefit analysis, comparing the cost to the benefits that you want to get. And then there are tax considerations. So you ask yourself, what is the best way to optimize my investment tax-wise? If you are concerned about capital gains alone, you just want capital gains, then there's no need to buy shares in companies that pay frequent dividend, because what you need is capital gains. And the tax on capital gains is lower than the tax of income. If you are concerned about getting regular income, what you need is to invest in companies that pay dividends. They pay dividend frequently, and then you know that because you are getting dividend income frequently, there might be some form of tax that you'll be subject to. So there are also tax considerations to consider when you are making this investment. So in a nutshell, it's just important to ensure that there is a culture of saving, a culture where from whatever we make, we put something aside. I encourage you to seek professional advice for personalized investment strategy, because this is a bit generalized. And I also encourage you to not invest in something you do not know, except you've engaged a middleman that understands that line of business very well. And then that's it really. Just savings, and make sure that you put your money where you know, or you do a passive investment when you do not know. So we just thank you very much for having more questions now.
Wow, I think that was an amazing session. Thank you so much. We've really learned a lot today. Thank you so much, Oluwaseola, for that insightful session. I said earlier that this session is actually going to be impactful, and we can all see that it is nothing short of that. If you're just joining us, you're welcome to our Vale webinar today, where we're speaking against hedging, against FX fluctuation and inflation. Basically speaking, how to manage our wealth in general terms. And some of the things that Oluwaseola touched on, a lot of the things that she touched on is actually very profound. But some of the things that I want to again bring to our memory are, the impact that FX fluctuation has on our day-to-day activities. Some of the things that she has talked about is the impact that it has on our cost of imports and export. A lot of us want to bring things into the country, and we can see that, today the price is, let's say, 1,000 naira. Tomorrow it is 2,000 because of that, that inflation. And some of the things that she said, or the key strategies to protect us from FX inflation. She talked about exploring other forms of investment, real estate, investing in stocks, which would of course lead to capital gain. She also talked about alternative investments, where she mentioned hedge funds, commodities, and she kindly noted that it is very important for us to note that this requires a whole lot of expertise, and that would require us to engage a middleman, someone who has knowledge about the financial market. She also talked about having a savings culture. As you earn, it's not everything that you spend, right? It is very important that you have a saving culture. And she also mentioned that it is important that you do not invest in something that you do not know, or you do not have the time for. Just because everyone is doing it doesn't mean that it is meant for you. And I think that's actually profound. That we have a whole lot of people who have succumbed to, oh, because my friend did it, because my auntie did it, I think it is good. Then they go into it and they realize that they are in a lot, that they are in a quagmire. In short, they are in a problem. So these are some of the things that we need to take into practice. So we're going to go into our question and answer sessions. already. We have some questions that we've received as people were registering for the program. So I'm just going to be sharing these questions, and our facilitator, Oluwashola Konde, would be answering these questions. And again, if you still have questions, you can please drop them in the chat box. So Oluwashola, now to you. Can you please share a personal experience where you successfully implemented a strategy to hedge against inflation or FX fluctuations? What challenges did you face, and what were the key lessons learned from that experience? More of a personal experience. Would like you to share that with us.
Thank you very much. I think personally, how I've done that in the past was the leading and lagging techniques that I spoke about. I had a time where I had to pay for some education related expenses in USD. It was quite an amount. What I did was towards the beginning of the year, when FX was really, really low, I paid ahead. So I'm talking about like 6 months to 12 months ahead, where I paid a lot ahead. And then when I really needed the funds, I just went to my USD savings to pay for it. At the time that I was paying for it, every other person was just like, this exchange rate is too high, this is expensive. But I didn't stick that way because I planned it ahead and I paid in advance. So that is how I've done that in the past in terms of FX fluctuation. For inflation, I mentioned savings culture. Is where you save that you invest. So you as an individual want to ensure that you have a percentage of your funds that you save. I know people say 20%. If you 20% is too much, just start. The key is to start. So if you can do 10%, just to tell yourself I'm starting. And as you start with 10%, you can progress to the 20% we speak about. Just start. And so I had savings that I invested in Vale where I've gotten interest. And so when you need money, you can't just go and say, give me my interest. You might not even have to touch that original investment. This is now your money working for you. So for me, it's been a saving culture. Investing in a reputable financial institution like Vale, where I can say, okay, I put this money in my vault. When I need it, I get it. It's now my money is not reducing in value. My money is making money for me, not just leaving it in a bank account and then the value keeps dropping from time to time. Yeah, I hope that's answered. Thank you.
Thank you so much, Oluwashola, for that. I think that answers the questions. That answered the question profoundly. And you spoke about actually saving. And we have a question that just touched on that. Is it advisable to buy foreign currency or instead of saving in naira? A lot of people thought dollar was going to get to 2000, 2005, and just kept on buying, and then there was a dip. So is it advisable to buy foreign currency or just save in naira?
All right, then. So remember I said that what are things that causes foreign currency fluctuations? These are speculations. So I also mentioned that do not dabble into something you do not know. There are people today that they have a lot of tools to tell you whether FX is going to come down tomorrow or go up. So that is their forte. So they can speculate, and a lot of times it works for them. If you, as a very humble Nigerian, decide to dabble into that space, the risk is that you may not have the expertise to accurately determine which direction the naira is going to. So if you really don't have a good way of knowing whether to come down or go up, just invest your money in the place where you fully understand. Naira is naira. I invest 10 million today, I get this amount of interest on it, I get my money back. So again, it now depends on what your future need is. If you have needs or liability in some months' time that is in foreign currency, then yes, have a DOM account and save money in USD towards that foreign currency liability. If you have no foreign currency needs today, and you go ahead and buy USD for speculative purpose alone, then I would say that the risk is there, that you might lose your money. The risk, there was a time that Naira came down from 1,500 to 900 within 1 week. Some people cried. Some people lost their money. Some of those people might people that is not their space. They were just doing it because every other person is doing it. They don't understand the technical analysis that the experts in that area have to do before they venture into such things. If you go along that route, you might lose your money. So I'd say again, only do that if you have expenses, liabilities that you need to incur in foreign currency. Or only do that if you are taking a very long-term position. Don't dampen into foreign currency stocks if you are not taking a very long-term position or you don't have liability or expenses in USD. Thank you. I hope that's
Fantastic. Thank you. Yes, absolutely. Thank you so much for answering that question. Again, to our listeners, thank you for participating and contributing to this session. We have another question. Yeah, and you spoke a lot about investments today. And I think this question is tilted in that direction. And here goes the question. Please, can you advise on which is better? Buying shares in a Nigerian company or Nigerian companies as against buying shares outside the country. We for again the listener said the participant asked that he knows that Nigerian companies can be traded on NGX or one of the United States, for instance, which would you advise, is better? Buying shares outside the country or you buy shares, in Nigeria? And how do you go about buying shares outside the country?
okay. So there are some shares of companies in Nigeria that are actually not just limited, they are not quoted on NGS. I don't want to go into that's why I said if you need something really very, very customized for you, you might have to seek professional advice. But just keeping it high level, yes, there are some companies in Nigeria that they're Nigeria, operating in Nigeria, their shares are not quoted on NGS. So if you're able to buy shares in those companies, you're going to benefit from that. So I'm going to address this. Should I buy shares in Nigeria company or foreign country? From the perspective of what I've said earlier. An asset is an asset. USD in your account is an asset. Shares of a company outside of Nigeria is an asset. They are both FCY assets. The risk is there. The risk is that you take your Naira today, you exchange it at 1,500 to $1, and you buy an asset, shares in a country, in a company that is domiciled in US, for instance, right? You get your capital gains in US, you get maybe your dividend income in US. In the future, you're going to either sell your shares or you have your dividend income in USD in your USD accounts. So it is now the balance between by the time you want to convert that your proceed to Naira, is the exchange rate favorable at that point? So it's still a play of exchange rates. You believe that you are going to hold the assets, the USD shares, for a very long, and you believe that exchange rates will be favorable at that time. Why not? It's good. But if for some reason it's a very short-term investment, and you're not starting whether rate will be favorable to you, by the time you want to convert your money back to Naira, then maybe it's not worth the risk. Maybe you should find Naira investment to do. So it's again a play of exchange rates. That's how I see it. The case is very similar to someone that is buying index.
All right, thank you so much, Oluwashola. Thank you for answering that question. There was a shocking revelation this year on social media where a particular statistics shows that majority of Nigerians earn below, I think it was about 250 to 300 thousand, majority, even about 75 to 80%. And that means a lot of people are actually earning within this particular range of 200 and let's say 300 to 400,000. Now the question here is this, that what is the best kind of investment a person who earns less than 200,000, 250,000 naira monthly can do? Saying that we even have statistics to back it up, that a lot of people fall within this range.
Okay, thank you for that question. Really, when it comes to investment, there are a lot of investment that you can do low tickets, like equity. I know that when MTN started selling their shares, it was selling their share. It was as low as 169 naira per shares. So meaning that if you have 169,000 naira, you can buy 1,000 units. If you have 50% of that, you can buy 500 units. So if you think your income is not that high, you can still buy shares of companies. I know some shares of financial institutions that are trading below 50 naira. So that is one unit. You can buy XYZ unit of that. You can do money market funds. You can do fixed term deposits. Like Veil on your Veil app, you can put your money in the box and it will give you the interest that you need. So please don't wait till when you are making a lot of money to save or to invest. Money markets, fixed deposit, even shares, you can do that fund you think is small, and your money will earn for you. Yes, thank you.
Thank you very much for answering that question. I think it has been a great session so far. Thank you, Oluwashola. It's also interesting to know that she's also the group financial controller at Vale Financial Services. And I'd just like to talk a little bit about Vale. Like I said earlier, Vale is a fintech company with a financial service company founded on the premise that basic savings and investment services should be helpful, it should be easy, and it should be free. So we provide seamless services. So what are the things that we do here at Vail? We offer deposits, that liabilities. You can actually save with us and earn up to 21% interest rate. And I think that is actually great, right? Our products are designed to be customer first, and we prioritize our customers. We also offer credit facilities, loan services, asset financing, LPOs, and you would be sure that there's something that you're always going to get with us here at View, which is how we prioritize with you. So one of the things that I would like you all to do, we're going to be putting the website on this place right now. I think one of the home team, Zainab Otulu, will be putting up the website of the company on the chat box, and you can actually click on it and learn more about what we do here at Vail Financial Services. So again, we're really excited to have we're really We're really excited to have every one of you here. And again, I remember something. This if you bank with us, we have an app. It's on App Store, it's on Play Store. You can just download the Veil app. You can be sure to get overnight interest, meaning that you can wake up to interest. In no other, there's no better way to describe it than sweet, than sweet, right? When you wake up, you are saying that there's credit alert. Everybody likes to wake up to, credit alerts, in the morning. So you can download that app, you can invest with us, and then you get your overnight credit alert. Let me put it like that, interest whenever you bank with us. So we have sweet products, we have very fantastic products, and yes, one of our team members have just put on our website. You can just go to www.vail.ng to learn more about Vail Financial Services. Thank you once again for participating in our session today. My name is Iberiayo, and it's been fantastic being in this particular session with you. Do have a nice day, everyone.